Hey everyone, in this video I'm going to answer which stock is the better dividend stock. Is it Home Depot or is it 3M? To answer that question, I'm going to look at each company's most recent quarterly earnings report review, and then I'm going to look at their dividend yield, followed by the longer term operating profit margin, and finally I'll compare their valuations to come up with the answer which dividend stock is the best one to buy at the end. So let's get started with Home Depot's latest quarterly earnings review, where revenue decreased by 4.2% to 37.3 billion. Remember, Home Depot absolutely thrived during the pandemic when people stuck at home thought that home improvement would be an excellent project, and that persisted for a little over 2 years. But finally, Home Depot's revenue is taking a little bit of a pullback much later than investors thought would happen. So that caused management to lower expectations for the full year, now expecting sales to decrease by 3.5% and earnings per share to fall by 10%. And to be honest, this is only a slight pullback considering the absolute boom Home Depot experienced during the pandemic. And if this is the only pullback Home Depot experiences over from the rise during the pandemic, investors would be thrilled with this stock. Moving on to 3M's latest results, where revenue of 8 billion was down 9% year over year and adjusted earnings per share fell to $1.97, down from $2.63. The company is announcing massive cost cutting with a 6,000 job cut planned after a 2,500 job cuts in January. The management team reiterated a target of 4% revenue decrease for the year with earnings per share of $8.75. If you notice here, revenue falling 4% year over year means that the rest of the year is going to be a good year for 3M, because the first quarter revenue was down by 9%. And so if it's going to end the quarter with revenue down just 4%, that means the second, third, and fourth quarter is going to be much better than the first quarter. So improving trends for 3M. Of course, the overhanging issue is the lawsuit, the case that could cost the company upwards of billions of dollars if 3M should lose this case. That's something that 3M investors should keep an eye on and look out for the outcome of that legal issue. Now, looking at the two companies' dividend yields, you'll notice that 3M boasts a very strong 6% dividend yield compared to the 2.68% dividend yield of Home Depot. So if the dividend yield is the only thing you're looking at, which is not something you should do, then 3M would win this case because it's got a more than 2x dividend yield. But the reason I say you shouldn't only look at the dividend yield is because when you buy a dividend stock, you're also exposed to changing stock prices. So if your dividend yield is 6%, but the stock price falls by 10%, you still end up losing 4% of your wealth. So that's not a win-win case there, right? You don't want that to happen. So that's why you consider the stock performance potential as well as the dividend yield, and that's what we're doing in this video. We're looking at both. We're looking at the stock price potential, and we also looked at the dividend yield. Looking at longer term profitability, the operating profit margin, 3M held a nice advantage over Home Depot for the longest time, but that started to decline in 2022, and Home Depot took the advantage at 15.19% compared to an operating profit margin of just 11.86% of 3M. Additionally, I like that Home Depot's trend has just moved consistently upward, even though it's moving upward slowly, rather than 3M, which has moved downward from a higher point. So I like to see the company that's moving its operating profit margin better. It's getting better because it tells me it's getting better at doing what it does and making slow incremental progress over time. I love to see that in the companies I invest in. Finally, I wanted to compare these two stocks in their valuation. I chose to use the forward price to earnings ratio, and in this metric, Home Depot stock is trading at a forward PE of 18.68, while 3M stock is trading at a forward PE of 10.41. So 3M is the cheaper stock compared to Home Depot. Still, even though Home Depot is more expensive, if I had to pick one of these two dividend stocks to buy today, I would pick Home Depot stock. I like Home Depot's prospects in the long run. I like that it's in the home improvement industry, an industry that's approaching $1 trillion of a total addressable market that's dominated really by two companies, Home Depot and Lowe's, that are not really competing fiercely against each other. You're not seeing very many promotions, discounts, incentives to shop at either Home Depot or Lowe's, and that's allowed their profit margins to remain in the teens for a long period of time. So I like Home Depot for all of those reasons I mentioned as my favorite dividend stock to buy between these two. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.